Hello everyone, my name is Eldana Arsila Dakius with metric number 69548. In this assignment, we have choose Leihong Berhad and QL Resources Berhad as our research companies. The two companies are involved in the agro-food industry in Malaysia and are well known for their products. The related items, including fresh produces, are marketed by both businesses. For the background of the companies, Leihong Berhad is the leading producer of fresh farm eggs in Malaysia because of its commendable growth, which produced approximately 5,000 metric tons of processed chicken products and 4,000 metric tons of pasteurized liquid eggs annually. The company's vision is to become a recognized combined livestock farmer and premium producer. In order to fulfill this vision, the company is armed with the construction of a state-of-the-art production facility. The company have two brands manufacture foodstuffs such as NutriPlus and Wise Choice, which are mostly sold in East Malaysia. It also received some awards such as Outstanding Layer Farm Awards, Anugerah Hasq for the Ternakan Industry Pengeluaran, and Super Excellent Brand for the Asia Pacific region based on quality production. Next, the background of QL Resources Berhad. The company was established in 1987, formed through Dr. Chia Song Kun and his brothers. The company's vision is to be the preferred global agro-based enterprise, and currently, QL is one of the major producers of egg and ceramic in Asia and established sustainable palm oil sector such as milling, planting, and biomass green energy. QL has succeeded and supplied Malaysia, Indonesia, Vietnam, and China, but its market presence is transcontinental. Next, the industry outlook and information. Malaysia comprises of a diverse community that leads to specific local food items. Since the majority of the country are Muslims, the country has entered global market as a globally ready domestic market for halal food. The agriculture and agro-food processing industry have made the country one of the global leading food and beverage among ASEAN countries. These valuable ventures are only open to vast companies like QL Resources and Leihong Berhad. The companies can expand and sustain bulk production on the global market. Malaysian university and research centers create this device to complement small and medium-sized enterprises, especially the cottage industry that currently producing smaller food and farm products because of the failure to modernize. The invention in the country will boost the socio-economic position of QL Resources and Leihong Berhad.
My name is Neil Salomeki, and I will present a SWOT analysis for Leihong Berhad and QL Resources Berhad. Let's look at a SWOT analysis for Leihong Berhad. For strength, Leihong recorded increases in revenue because of more aggressive approach in marketing activities carried by the sales team. Besides that, all chicken products offered by Leihong for sale are certified halal. For weaknesses, Leihong take appropriate measures to trim costs and improve its performance by offering fresh product, especially in supermarket business that moving slower. In addition, due to higher deferred tax, Leihong recorded a high share of loss in 2020. For opportunities, Lehong have extensive operations in Peninsular Malaysia and Sabah. Furthermore, Lehong is partnership with NHF Japan and on track to become one of the leading halal producer poultry products in the country and internationally. For trades, credit risks and default payment by customers have affected Lehong in cash flows, financial health, and performance. Next, foreign currency fluctuation risks will impact Lehong financial performance and profitability. Let's move on to a SWOT analysis for QL Resources Berhad. For strength, QL Resources' commitment to give Muslim consumers the assurance that the products are halal and was prepared in accordance to Islamic laws. Besides that, QL Resources manufactures safety and quality products that provide convenience to consumers. For weaknesses, QL Resources undertakes regular IT risk assessment as measures to mitigate network security, data protection, and cybersecurity risks. In addition, internal control processes and close monitoring of the market are employed to mitigate financial risks. For opportunities, QL Resources have expanded 184 Family Mart stores open in Malaysia. Furthermore, QL Resources have produced 5.8 million eggs per day and become a leading egg producer in Malaysia. For trades, due to pandemic COVID-19, QL Resources ensure the business operate with conformity to strict SOP. Next, the changes in weather will have an impact on the operations. Thank you, that's all from me, and I will pass this presentation to the next presenter.
Hi, I am Claudia Dayang. I will continue to present our financial statement. There are two types: financial statement, trend analysis, and cross-sectional analysis. This is trend analysis of QL Resources Berhad. First is liquidity ratio. For current ratio in 2018 is 1.59, in 2019 is 1.52, in 2020 is 1.39. For quick ratio, in 2018 is 1.11. For both 2019 until 2020 is 0.93. Next is efficiency ratio. For inventory turnover ratio, in 2018 is 8.67. In 2019 is 6.32. In 2020 is 8.37. For fixed asset turnover ratio, in 2018 is 1.92. In 2019 is 1.85. In 2020 is 2.07. For total asset turnover ratio, for both year of 2018 until 2019 is 0.98, and for 2020 is 1.02. For days sales outstanding, in 2018 is 42.95 days. In 2019 is 38.1 days. In 2020 is 36.5 days. Next is debt management ratio. For debt ratio, in 2018 is 19.44%. In 2019 is 19.10%. In 2020 is 22.10%. For time interest earned, in 2018 is 6.44 times. In 2019 is 5.81 times. In 2020 is 5.52, 4.52 times. For EBITDA coverage ratio, in 2018 is 4.5, 2019 is 4.8, 2020 is 7.3. Next is profitability ratio. For Profit margin in 2018 is 18.56%. 2019 is 18.98%, and 2020 is 19.9%. For basic earning power, in 2018 is 7.68%, in 2019 is 7.39%, and 2020 is 7.55%. For return on asset, in 2018 is 18.22%, in 2019 is 18.65%, in 2020 is 20.32%. Return on equity in 2018 is 33.78%, in 2019 is 35.50%, 2020 is 40.95%. Next, market value ratio. For earn per share, in 2018 is 12 cents, in 2019 is 30 cents, 2020 is 15 cents. For cash flow per share, in 2018 is 4.0, 2019 is 4.5, 2020 is 2.8. For book value per share, in 2018 is 6.3, in 2019 is 6.5, in 2020 is 7.2. This is trend analysis of Lehong Berhad. First, liquidity ratio. For current ratio in 2018 is 1.03, in 2019 is 0.96, in 2020 is 0.82. For quick ratio in 2018 is 0.74, in 2019 is 0.66, in 2020 is 0.77. Next, efficiency ratio. For inventory turnover ratio in 2018 is 9.25, in 2019 is 55.43, in 2020 is 59.77. For fixed asset turnover ratio in 2018 is 1.92, in 2019 is 4.29, in 2020 is 4.97. For total asset turnover ratio in 2018 is 1.07, in 2019 is 1.60, in 2020 is 1.57. For days sales outstanding in 2018 is 75.2 days, in 2019 is 26.4 days, in 2020 is 15.5 days. Next, debt management ratio. For debt ratio in 2018 is 15.53%, in 2019 is 12.22%, 2020 is 38.12%. For time interest earned, 2018 is 4.22 times, in 2019 is 1.56 times, in 2020 is 1.65 times. For EBITDA coverage ratio in 2018 is 6.43, in 2019 is 20.46, in 2020 is 6.81. Next, profitability ratio. For profit margin in 2018 is 18.80%, in 2019 is 17.20%, in 2020 is 15.13%. For basic earning power in 2018 is 6.60%, in 2019 is 0.78%, in 2020 is 2.64%. For return on asset in 2018 is 20.15%, in 2019 is 27.48%, in 2020 is 28.14%. For return on equity in 2018 is 44.65%, in 2019 is 52.75%, 2020 is 58.01%. Net market value ratio. For earnings in 2018, 4.0 0.47 cents. In 2019 is 1.11 cents. In 2020 is 0.51 cents. For cash flow per share, in 2018 is 3.8, in 2019 is 5.7, in 2020 is 4.3. For market book value per share, in 2018 is 3.6, in 2019 is 5.0, in 2020 is 5.02. This is cross-sectional analysis comparison between QL Resources Berhad and Lehong Berhad at year of 2020. In terms of liquidity ratio, QL Resources Berhad are more liquid. Meanwhile, Lehong Berhad show the liquidity position is weak. Next is efficiency ratio. Lehong Berhad is more efficient to get faster in inventory being sold. In terms of inventory turnover ratio, Lehong Berhad sale is 59.77. Meanwhile, QL Resources Berhad is 8.37. In terms of day sale outstanding, Lehong Berhad collect on sale more fast and it's getting better. That is because the firm has a strong credit policy. Next is debt management ratio. QL Resources Berhad is more able to manage the debt. Besides, the firm is also able to fulfill the interest obligation or charge, but yet both firm coverage still trail the industry average. Next, profitability ratio. In terms of profit margin and basic earning power, QL Resources Berhad show more profitable, which is 19.9% than Lehong Berhad, which is 15.13%. And earning power of QL Resources is 7.55%, meanwhile Lehong Berhad is 2.64%. But in terms of return on asset and return on equity, Lehong Berhad show higher improvement than QL Resources Berhad because the higher the return, the better the return for the shareholders. Next, market value ratio. In this table, as we can see, QL Resources Berhad earning per share is 15 cents. Meanwhile, Lehong Berhad earning is 0.51 cents. Next, cash flow per share. Investor is willing to pay more to Lehong Berhad compared to QL Resources Berhad. Next, book value per share. Investor willing to pay more in QL Resources Berhad.
My name is Desi Alviana Jiki. I will explain the part corporate issue and recent news. For Lehong Berhad, corporate issue is having a significant debt burden. Howard Marks put in nicely when he said rather than worrying about share price volatility. For recent news, the end of September 2019, Lehong Berhad had a debt of Rm 257 million, up from Rm 233 a year ago. For corporate issue and resilience for QL Resources Berhad, corporate issue is the segmentation for the family mart convenience store business has been delayed possibly due to weaker sales during MCO. For recent news, company earned a net profit for the fourth quarter ending March 31, 2020 of Rm 42.97 million, slightly charged Rm 43.26 million in the same quarter last year, was used to participate in the bonus portion of the bonus for each of the two QL shares held on the date of eligibility to be determined. That's all. Thank you.
Good afternoon. I am Lim Yong Sing. I will continue the presentation for the part of the stock performance. Because our group are taking the report on the first quarter of 2020, so the index comparison will end on March 2020. In 2017, the highest stock price of Lehong Berhad is achieved 1 ringgit and 7 cents on October, and the lowest price is 0.79 ringgit. In 2018, its highest price is 1 ringgit, and after this, its price dropped drastically from the third quarter Its lowest price is recorded on November, which is 0.34. In 2019, its price showed a stable performance. Its highest price recorded 0.52 ringgit and the lowest price recorded 0.39 ringgit. In first quarter of 2020, its highest price reached 0.44 ringgit and it dropped to 0.21 as the lowest price for Lê Hồng Berhad. As a conclusion, Lê Hồng Berhad's price stocks are showing a downward performance according to the graph. Next is the stock price of QL Resources Berhad. Its higher price is 4.99 ringgit and its lowest price is 3.83 ringgit in September of 2017. Its price drop started at the third quarter of 2017. After this, its lowest price in 2018 is recorded 4.44 ringgit, which is recorded on the first quarter of 2018. Next, its price start to increase and its highest price is recorded on 7.48 ringgit on November of 2018. Then, its price performance show a stable performance in 2019 because it record the highest price is 7.44 ringgit and the lowest price is 6.63 ringgit. In the first quarter of 2020, its highest price reached to 8.61 ringgit and it dropped to 6.95 ringgit at the lowest price due to the pandemic. As a conclusion, QL Resources Berhad show a upward performance during these 2 years regarding to the graph.
My name is Norazima binti Ahmad and I would like to present about stock cycle for QL Resources Berhad. In 2017, the performance of QL Resources Berhad stock market index is increasing from month to month during the year. This is because QL Resources Berhad has taken steps to expand operation in Indonesia through an additional investment of 15 million for a new farmhouse to increase the company's monthly chicken breeding capacity. Furthermore, 2017 was a good year for POA as CPO prices strongly recovered from El Nino, and the factory is also busy with more processing activity which led to an improvement in the company performance. Moreover, the performance of the company Family Mart convenience stores on average increased based on contributes to the company profits. In 2018, their stock market index also increased as well. They opened the Hutan Melintang unit and it worked for frozen surimi based product factory and frozen product factory. Furthermore, the shrimp aquaculture unit in Kudat is currently in the recovery phase after the shrimp disease outbreak last 2 years. The operation was supported by the Malaysian Fisheries Department with a Certificate of a Good Agriculture Practice Malaysia or MyGAP and Quality Certificate Fish or FQC, increasing confidence in food safety and sustainable practice among buyers. In 2019, QL Resources Berhad achieved excellent performance. This is because in that year they have explored new markets by partnering with a big restaurant and supermarket in China by supplying surimi-based products. The expansion of Family Mart convenience store in Malaysia is also factors in the increase in the stock market index, and it seems that investors also believe in the company capabilities. In the first quarter of 2020, QL Resources Berhad net profit for the financial year and March 2030 saw a marginal profits. For the quarter and June 30, the group seafood manufacturing segment (MPM) saw a increase in product before tax year-on-year to 61.86 million, higher sales, economy of scale in production, and good forex from exports. In this regard, QL Resources said its management remains committed to striving for growth in the coming quarter despite uncertainty caused by the COVID-19 pandemic that is sweeping the globe and weak market sentiment. Next is Lê Hồng Berhad. In 2017, the stock market index for Lê Hồng Berhad company showed a good performance. Health-conscious consumer factor had led to a steady increase in demand for Nutri-Plus brand functional egg, and this has resulted in the group recently being awarded the brand laureate for best brand for the most popular brand for consumer egg for 2016 until 2017. In 2018, poultry and egg firms Lehong Berhad recorded a decline in the company revenue. The decline in their stock market index is also due to increased inventory in supermarket. Investor Leo Humber has said this is a classical overpromise under-deliver situation, and as a result many institutional funds are left frustrated with the group financial performance. Low receivable ratio may be due to group having poor collection process, poor credit policies, or having more customers who are not financially or creditable. In 2019, net profit for Lehong Berhad was still down. The lower profit was due to the group recognizing the share of the associate lower amounting to 1.43 million in the quarter under review. Lehong showed lower pre-tax profit due to higher rebates given to supermarket and higher revenue advertising and promoting spending for the quarter. In the first quarter of 2020, it still showed a decline in the stock market index. This is because the lower egg price and also the Lehong company acted quickly in preventing the bird flu virus detected by the Sabah Veterinary Department near one of the farms in Tampawili. So they had to reduce the production of their product and take steps not to bring new livestock. As a result, their production declined. So that's all from me, and I would like to pass to the next presenter. Thank you.
Hi, good afternoon. My name is Claudia Anthony. I will conclude all the slides for our presentation. Having said that, the long-term goal will be QL Resources Berhad having a sustainable business performance where they have a rising earning per share for 15% throughout the year, making the investor hold the company in a higher regards. It might due to the selling product is psychological needs and because of COVID pandemic. Lehong Berhad having a letback on its business performance even though they having a tremendous increase in earning per share. The shares of Lehong Berhad are not increased much, having its market price for 5 ringgit 2 cent, meanwhile QL Resources Berhad is at 7 ringgit 20 cent. They should strategize back the shares and reduce the debt ratio of the company. For the short-term goals, QL Resources Berhad quick ratio is at 0.93, meanwhile Lehong Berhad is at 0.77. Thus, shows that QL Resources can use its cash and asset to pay down its current liabilities than Lehong Berhad. Lehong increased its liquidity ratio in the year 2020 but having an increase in debt ratio in the same year. Thus, might having difficulty to convince the investor to invest in their company. So that means Lehong Berhad should strategize back to earn trust from the investor.